What is minus? Can you tell me? You will say plus is add, minus is subtract, but what is add, what is subtract, what is that? It doesn't have any meaning itself. But if you tell me 2 plus 2 is equal to 4, yeah, then it makes sense. Similarly here, it will make sense when I relate this with assets, liability and everything, okay? So wait for that. Just remember that debit and credit, they just signify the duality principle or dual aspect, okay? We'll come to that. See here, we were in double entry. So in double entry, what it means that, every transactions have two effects, debit and credit, and both of them are recorded, okay? Accounting attempts to record both effects of a transaction or event on the entity's financial statements. Yes, and those two effects are, as I said, debit and credit. And every transaction will have one debit, one credit, okay? And the effect of them will be equal, always equal. That's the duality principle. Yeah, that's what I said. Debit and credit represent the duality principle or dual aspect principle of accounting. All right? Yes. So it will always be equal, okay? The effects will always be equal. LHS equal to RHS. Clear? So this is what double entry is. Now I will relate this debit and credit with the asset and these 5 elements. Then you will understand what is this debit and credit, okay? Yeah, because you can't say debit is plus, credit is minus, something like that, okay? Most of the people do that. That's the biggest misconception. They say debit is good, credit is bad, or debit is plus, credit is minus, something like that. No, it's neither good, neither bad, okay? It's not like that. Yeah, it represents something else. It represents the duality principle, okay? So we'll come to that now. So do you understand what double entry is? Yeah, see here, let me show you. See here, in this transaction when you went to the bank and when you got a loan, what happened? This transaction had two effects. One effect was that you got the cash, 40,000. Yeah, this was your asset, isn't it? And then here what happened? Immediately you had to recognize the liability also, because a present obligation was created. You have to pay. So a liability was created, right? So asset is there, liability is there. So this is the dual aspect I'm talking about. Yeah, when you purchase the machinery, what happened? When you purchase the machinery, there was cash, yeah, asset, this asset cash was reduced, yes, and then this machinery 20,000, this asset increased, isn't it? So every transaction will have dual aspect. It will have two aspects. That is what is meant by double entry, and both the aspects have to be recorded. Yeah, we have got the cash. When we got the loan, we got the cash, our asset increased over here. And here what happened? The liability also increased. We have to pay to the bank, isn't it? Bank loan. So that's what. When you brought the money into your business, what happened? Cash increased, capital also increased. Yeah. So this is what. Yeah. And one of them will be debit and another will be credit. Okay. So we'll learn that. So this is what is double entry. Okay. Every transaction will have two effects. Yeah. Do you get this? Yeah. Bank example, simple bank example. When you got a loan, yeah, money is coming in, liability is also being created. Simple as that. So duality principle. Yeah. Now let's see what kind of balances does these 5 elements have. Yes, these are the 5 elements, right? Asset, expense, liability, equity and revenue. So now you must know what kind of balances do they have. Yeah, it will help you to pass the journal entries as well as to do the ledger posting. So entire accounting is based on this, yeah, modern equation. And you will also be able to relate the meaning of debit and credit over here. Yeah, listen to this properly. So see here, asset always have debit balance. Asset always have debit balance. Why is that? See, I can't tell you. Similarly, how you can't tell me why sugar is sweet, why salt is salty, or if you remember high school chemistry, then why protons have positive charge and why electrons have negative charge. You can't tell me that. So similarly here, I can't tell you why asset have debit balance. It just is. Okay, that's it. Period. Yeah, asset always have debit balance, expense always have debit balance. It's just a rule. Yeah, so they always have debit balance, these two things. Yeah, so whenever asset increases or you want to increase the asset, then you have to debit the asset. Okay, or when you want to increase the expense or expenses have been incurred, then you have to debit that. Yeah, and whenever you want to decrease any asset, let's say you have sold off the asset or the value of the asset is decreasing, then you have to credit the asset. Okay, simple. They have debit balance, you want to increase them, then debit them more. Yeah, if you have a sugary drink, you want to make it more sweet, then you have to add more sugar, isn't it? Just like that. Yeah, it has debit balance. To increase it, you will debit it more. To decrease it, you will do opposite, credit. Simple as that. Expense also. debit balance. To increase, you have to debit. To reverse the expense, sometimes what we do, sometimes we make an error. Yeah, expense never decreases. If you want to reverse the expense, then only you will decrease the expense by crediting it. Simple? Yes. Then liability, equity and revenue, they always have credit balance. Yeah, credit balance, always credit balance. So to increase them, what you're going to do, you are going to credit them. Simple as that. Yeah, equity also, capital also, equity or capital, credit balance. To increase them, you have to credit them. Yeah, revenue or income, whenever you get revenue, that means revenue is increasing, so you have to credit revenue. Yes, whenever they decrease, you have to do opposite, you have to do debit. Simple. This is the modern equation. Okay, so from here you can understand that, you know, debit doesn't mean plus or minus, and credit also doesn't mean plus or minus. You know, it can be both, it can be plus and minus also, because it depends upon the type of element. If it's an asset, yeah, for asset debit means plus. Yeah, and for expense also what, plus. Yeah, debit means. But for liability, equity and revenue, what, it is minus, isn't it? So you can't say debit is good, credit is bad, or debit is only plus, credit is only plus or only minus, something like that. Yeah, so just understand this modern equation. It's very simple. They have these debit and credit balances. To increase them, you are going to do whatever the balance is. Simple as that. Clear? Easy, right? Okay then. So here I'm going to end the video. Yeah, simple. So we saw so many things. We saw the meaning of accounting and then meaning of the 5 elements. Yes, what is asset, expense, liability, equity, revenue. Yeah, liability means what, they have claim on the total assets. Equity or capital means also they have claim on the total assets. And then revenue, inflow of cash. Expense means what, outflow of cash. Yeah, and then asset means what, asset means something you have control or ownership on, and you will get future benefit from that. Yes, and this was the accounting process. Source document, you prepare the journal entries. So yeah, in the coming videos we are going to see how to pass the journal entries, how to prepare the ledger account and everything. Okay, so stay tuned. So I will make a separate playlist. In that I'm going to upload all the basics of accounting. Okay then, see you in the next video. All right, bye.